We discuss these stocks with market experts Mayuresh, Joshi of Angel Broking and Milind Vasudev of Arihant Capital Markets. Gentlemen, morning. Thanks so much for taking the time out today. Mayuresh, let's start off with a quick comment on the markets first. What's it looking like? A little bit of a move lower, but I'll actually start off with Milind out here. Milind, what are your thoughts when we talk about the technicals for this index?
See, overall, if you see this wave has got good strong support at 7,800. If 7,800 is broken, then only the selling will intensify. But at present, as long as 7,800 holds, there is a fair chance that Nifty could be in a range of say 7,800 to 8,050 levels. So we are watching closely 7,800 levels.
Okay, so that's as far as the levels are concerned on the index at least. Talk about the Bank Nifty as well, Milind. Any thoughts on that?
See, at present, Bank Nifty also, if you see on a weekly chart, it has been given a small uptake, but this is a pullback in Bank Nifty. But at present, we feel that Bank Nifty has got strong support at say somewhere around 16,950 levels. So one has to wait for this level to be broken. Then only you could see that selling would intensify. But at present, yes, we are saying that there could be some pullback rally in offering. But currently, we have to watch 16,990 levels.
16,900 zone would be something to watch out for when we talk about the Bank Nifty. Let's talk about the mining and the metal pack, Milind, in terms of what's happening when we talk about Tata Steel, Vedanta. Any of these stocks on your watch list?
If you see Tata Steel is showing some kind of a divergence at lower level. It made some double bottom at say somewhere around 200. It has got a very strong support at 200 levels. Now at present we are seeing that if Tata Steel closes above 246 levels, then definitely you could see some upswing in Tata Steel, which could take this counter towards say 280 to 300 levels. So one should keep a strict stop loss of say 232 levels. One can keep a stop loss of say 220 levels. Sorry.
Okay. Hindalco as well. Any thoughts on that?
See, even if you see all the metal packs, Hindalco also is showing some kind of a bottom formation at present, and we are of that opinion that one should keep a strict stop loss of 72. On the upside, yes, it can move towards 88 and 96 levels, but at present, yes, there is some kind of a pressure in that counter.
Okay. Mayuresh also joining into the conversation. Mayuresh, a quick comment on the mining and the metal space and how one should be looking at them?
Morning, Priyank. So clearly, if you look at the way the stocks have moved over the past few quarters, the obvious reaction is of the Chinese demand supply still playing out. And clearly, if you look at realizations both on LME and the kind of demand outlook that you're probably seeing in terms of pure commodities, whether ferrous or non-ferrous, we're still seeing softness probably coming through. So again, I think no great improvement expected, at least for the next couple of quarters, to say the least. So again, I think a double whammy of sort, realizations not improving, volume growth not improving, and that will probably take a toll on the margins and the bottom line for a lot of these companies.
Okay. Interestingly, so some of the other stocks that have been moving as well, that we've been seeing beyond the mining and the metal space, has been Just Dial. The stock saw a little bit of a knock post the Goldman Sachs downgrade that we've seen. They put a target price of almost 750 on the stock. Mayuresh, any thoughts on Just Dial?
So clearly, I think, Priyank, if you go by the results in Q2, the results were below expectations that the street was probably looking at. Again, I think if you're traditionally looking at the kind of paid campaigns that Just Dial has got, the paid campaigns are a very minuscule component of the overall base that they've got. And clearly, I think the Search Plus updated app that they're probably getting in, the kind of ad expenses that are expected to come through for the greater part of FY16, I think it all really hinges on how the app probably moves out. And clearly, I think that will again have a toll in terms of how the bottom line moves up. So clearly, I think there is going to be some amount of pressure in terms of how margins pan out for Just Dial. So I think I'll be waiting for declines. I think not looking at buying Just Dial at the current levels. The valuation is also looking very, very reasonable.
Okay, so that as far as Just Dial is concerned and the way Qs are panning out there. Milind, on the charts though, how is Just Dial looking?
Yeah, at present, if you see today, we have a gap down opening, and if today's low is being broken, 862, then this counter can head towards, say, somewhere around 800 to 790 levels. So one has to avoid this counter at present.
All right, let me just quickly go across to Shell. He's been looking at that report that came out from Goldman Sachs and Just Dial. Shell.
That's right. So when you're looking at Just Dial, this is one of those stocks which has been under pressure over the last 2 to 3 month kind of period. Goldman Sachs has gone ahead and said that they have gone ahead and downgraded the stock from a previous neutral recommendation to a current sell recommendation. Also, the price target has been cut from 915 rupees per share to 750 rupees per share. That's quite a substantial cut in price target as well. Now, there are 2 or 3 major points that they make. The first one being they say that the overall execution risks as far as Search Plus is concerned do remain, and on the other hand, when you look at the core search business, even in that they feel that the revenue growth outlook may decelerate between FY17 and FY18. They've also gone in and said they've cut their overall estimates as far as FY16 to FY18 EPS is concerned between 2% and 15% on lower revenue and margin assumptions. On the other hand, one of the major points that they make is that the successful execution of the Search Plus platform would be a key driver for sustainability of the core search business operations as well. Now, as far as the valuations are concerned, Goldman Sachs says that the stock is trading at 54 times FY17 price to earnings, and this is at quite a significant premium to its global peers as well.
Okay, so that's as far as this is concerned. You can see stocks taking a knock of almost 5%. Shell, thanks for getting us those updates there. Moving on from Just Dial, talking about some of the other names as well that have been in focus today. BHEL has been one such counter that's once again seeing a little bit of a weak trade today. Mayuresh, cap goods again have been struggling. BHEL still in a void?
Clearly, I think if you again go by the numbers and looking at the kind of order book that BHEL has got, yes, I think the order books looks quite decent from an FY16 perspective. But again, I think there's a limited visibility over the next 2 years. Again, I think there are constrained issues in terms of execution because around 35-36% of their order book is slow moving. And again, I think the margin pressure would continue on stocks like BHEL. So I think the underperformance that BHEL has given out, I think the underperformance might continue for some length of time. So clearly, I think the stock will underperform, in my opinion, over the next 2 quarters again, to say the least.
Okay, Milind, in terms of technicals here, how are they shaping up for BHEL?
If you see BHEL, then it is clearly in a lower top, lower bottom formation, and every rally we have seen that selling has occurred. So at present, I would definitely say one should avoid this counter, and this counter can test the levels of say 165 to 162 levels. So one has to avoid this counter at present.
All right, the RSI also in totally oversold territory at 28 is what we're seeing, but it's been spending some time there is what we've been seeing as well. Let's just get a mention on ABG Shipyard on those flashes that have been coming up on your screen. ECL and Arum Invoke, some shares pledged by ABG Shipyard is what we're seeing in regard. Almost 2.98% stake pledged by the ABG founder is the other update that we're tracking. Stocks down nearly 1.2, 1.3% is what we're seeing so far. All right, moving on then. Chennai Petro is the other stock. Mayuresh, this one was active a couple of quarters back when the company came up with some strong performance. Stock's been trying to make a little bit of a recovery of late as well. What are you advising clients on Chennai Petro?
So clearly, I think if you look at the petrochemical stocks and if you generally look at the entire oil and gas space, including petrochemicals upstream, downstream, I think you're still going to see some amount of pressures come through specifically on the GRM side. And again, I think the way the Singapore margins are panning out, you're probably going to see some softness happening on that front. Again, I think if we're talking about refining capacity and what kind of throughput is probably expected from a lot of these companies, the performance has been quite exceptional over the next few quarters, over the past few quarters. So I think if the performance is expected to continue, I think the earnings also need to be taken into cognizance, which we don't believe at the current juncture are going to improve at a pace that one really expects. So clearly, I think we have a neutral view on the stock from the current level. I think the risk reward probably for a stock like Chennai Petro would be limited to the extent of around 8 to 10%. So clearly, again, I think would look at downstream companies. Within downstream companies, something like an IOC is something that attracts us at this point of time.
Okay, so that's as far as Chennai Petro is concerned. It's had a good year, at least on a YTD basis. You can see the performance of the counter. Milind, how are charts? What are they indicating when we talk about this counter?
See, this counter has sharply bounced back from 160 levels and to 206.50 on 1st of December. Now, it is showing some sign of trend reversal. So I would definitely buy strength above 207. I would enter this counter and keep a stop loss of 195 for a target of 220 to 240 levels.
Okay, that's the RSI of the counter at 48.9 currently is what we're tracking as well. All right, now talk about some of the other metal names as well. Bhushan Steel from the mid-cap pack has got some bit of news flow that's been giving it a little bit of a boost today. Mayuresh, looked at Bhushan Steel?
Unfortunately, I think we do not cover the stock, Priyank, so very difficult to comment on this one.
Let me get a quick technical check then. Milind, how are the technicals panning out for this?
Today we have seen a sharp bounce back with good volumes, but since this is also in a downtrend, one should keep today's low as a stop loss. Once it starts trading above 50 levels, it can move towards 55 to 60. But your stop loss should be near to 44 levels. So one has to be a little bit careful in this counter.
Okay, so that's as far as Bhushan Steel is concerned, is what we've been tracking. EIH, the entire hospitality segment, Mayuresh, has been extremely active. I'll get to the aviation bit in a second or two. But anything from this whole hotel stocks that have been showing good strength? EIH, Hotel Leela's been moving. Indian Hotels also somewhere got active in all of that excitement. What are you tracking here?
Clearly, I think the numbers were a tad bit better, specifically in the case of EIH. And clearly, I think the profitability shown by EIH was much better than what it had posted in the corresponding period last year. But clearly, I think this is one case. A typical case where a lot of sector rotation happens, stocks which have not moved, sectors which have not performed. I think a lot of movement happens in these sectors. But clearly, I think one needs to really understand whether the core fundamentals of the hospitality hotel industry have really changed. And clearly, if you look at the way the occupancy levels are panning out across the hotel industry, I think we're still seeing softness happening on that front. So again, I think the kind of spurt that you're probably seeing is a typical case where stocks or sectors which have not moved are moving in a substantial manner, but whether that has any fundamental base to that, I think the numbers should do the talking, which should show signs of consistency, which are probably not happening at this current juncture. So I think if 2 or 3 quarters of consistent growth starts coming through, the GDP growth starts happening in a much sustained manner, and the economic recovery happens in a sustained manner, the hotel stocks numbers will reflect that. But at the current juncture, I think they're not doing that.
Okay, so that's as far as the hospitality segment is concerned. Milind, any thoughts on some of these names, EIH, Indian Hotels or Hotel Leela?
See, EIH has been a strong rounding breakout at 123 level. Now, this said pattern has got a target at around, say, 145 level. Currently, it is trading at 133. I would advise clients that one should keep a stop loss of, say, 126 and wait for 145 to come in a couple of days' time.
All right. What about the aviation pack, Mayuresh? Jet's been on fire in the last couple of days. Anything from there?
So clearly, oil prices at multi-year low. You're probably talking about ATF prices being maintained at this level because oil prices are down, and that again has a huge impact in terms of how margins pan out for a lot of these stocks. The passenger load factors will show signs of improvement with the holiday season around. So Q3, Q4 numbers should be good. So from a technical or tactical call over the next 2 quarters, the stocks might still perform. But again, I think if you look at the core balance sheet strength, I think the negative net worth, the consistency in cash flows probably still not coming through for a lot of these companies. Again, the stocks have shown a huge amount of movement in terms of prices over the last 2 quarters. Maybe the trend will continue for the next 2 quarters, but will it be consistent? Because you really need to have a right business model in place. And again, I think with the kind of cyclicality that airline stocks are prone to, and if there is any chance of crude prices going up, and clearly I think if the economic cycle turns for the worse over the next few quarters with global demand supply still remaining weak, again I think those stocks might take an average. So for the next 2 quarters, the numbers will be we could, a technical tactical call still would be on the table. But again, I think the stocks have shown huge amount of movement. And again, I think with crude prices at an all-time low, at least for the last year or so, I think the scope in terms of improvement of margins from the current levels, which the street is probably trying to factor in, would again be of a question mark. So clearly, I think technical call or a tactical call over the next 2 quarters might be on the table. But fundamentally, again, I think would be staying away from these stocks.
Milind, aviation counters, SpiceJet, Jet Airways, any levels there?
If you see Jet Airways has vertically gone up. Now, those who are holding this stock can just trail the stop loss to 525 levels. This counter has potential to move towards, say, 600 to 650 in a couple of weeks' time.
Okay. What about Godfrey Phillips, Mayuresh? Interesting moves in this counter over the last few weeks or so now. Any cues here?
Clearly not tracking this one, but again, from this space, I think we've got a clear hold on ITC. Yes, I think the cigarette business has seen degrowth in terms of volumes, but again, the demand elasticity comes through, and with the price increases that a lot of these cigarette companies take, the top line, at least for the cigarette business, both in terms of how the growth pans out as well as the EBIT margins hold more or less sustain. And again, I think ITC is probably trying to venture into their other fields as well. So I think the non-FMCG business, the foods business, the hotels business, again, I think there is weakness on that front, but clearly I think if I have to pick and choose within the space, I think ITC is something which will still have a hold on.
Godfrey Phillips, Milind, technicals, what are charts telling you on this one? See, again, if you see the weekly charts, clearly a vertical move. You have seen a vertical move from 900 levels to, say, 1662 levels. This is clearly a vertical move. Not even a slight consolidation has taken in this counter. So at present, I would advise to book partial profit and trail your stop loss to, say, somewhere around 1500 levels. Yes, this counter can test 1700 to 1750 levels.
Okay, that's Godfrey Phillips out there. I've been looking at some of these small caps that have been moving, Mayuresh. I'm not too sure if you got Treehouse Education on your watch list, but the stock's been extremely choppy. Any idea as to what's been happening there?
So clearly, I think all the issues surrounding with the pledge shares, the balance sheet concerns that a lot of analysts are flagging out, I think that was the basic concern why the stock corrected. But clearly, I think the management seems to be very hopeful in opening a lot of their centers, specifically in the Delhi, Noida region, of around 150 centers added. In terms of the daycare centers, they're still expecting 190 odd centers to be opened up. And clearly, even if you're looking at the kind of sales that they're probably taking, they've got 5 of their own centers and they're trying to sell that off. The capital that they've raised, they're probably looking at debt reduction on that front. So I think it's an if-but kind of a situation in the case of Treehouse. You're not really sure on how the progress will probably happen. But again, I think if the numbers are indicating anything which is of a positive trend going forward with deleveraging probably happening on the balance sheet and clearly going on to the asset-light model, the stock probably can move from the current levels. But clearly, I think the stock has gone beaten down and there's a lot of news surrounding the stock. So I think fresh investors should be a little bit more careful in terms of analyzing the news and then taking a call.
Okay. Milind, I know the stock's on an upper circuit today, but do you foresee more momentum? Is this still a counter that could last, or as Mayuresh is saying, you got to be a little cautious around it?
Yeah, I also back this view. At present, actually, I don't track this counter, but definitely one should be cautious at current levels.
All right, gentlemen, we'll leave it there. Thank you so much for your time and sharing your thoughts and perspective on these stocks that are moving in trade today. Well, now moving on then, although neutral on global markets, Credit Suisse is overweight on Indian equities. In this conversation, Torul Munshi, head of India Equity Research Wealth Management at Credit Suisse, talks about key triggers and what lies ahead for the markets. Amni Raja began by asking her about the main market drivers to watch out for going forward.
So from a global perspective,